Hello fellow traders, welcome to another tutorial video. Thank you very much for your support. Like, subscribe, leave a comment for the YouTube algorithm. We had our first achievement in our channel. We reached 500 views, more than 500 and more than 50 hours of watch time. Again, I really thank you for enjoying my videos. Today we will talk about golden ratio and Fibonacci. Of course, the idea is not new. We must see how we can use them while we are trading. Fibonacci didn't invent anything related to this number, as he is a couple of thousand years late. Since Euclides we study them, and much older, in India, in Egypt, we study these analogies. He just copied the idea. We are keep mentioning him as this is the way that we will see the indicator. Actually, it's not an indicator, but it is a very useful tool, as most of the traders use extensions and the retracements to predict future price movements. I have said that in my tutorials when we are analyzing indicators. Most of the indicators are lagging. They cannot predict the future. This is not. It's a tool that can predict the future price. Keep tight. Don't get excited. It's not so easy. I will give all the explanations you need. Like what we did with all indicators, I will provide you pros and cons, so it's up to you on how to use it. You will see it mentioning in many videos and in many analyses on the retracement and the extensions of the Fibonacci. And here it is, because I also got a request to cover the subject. I usually I use them very often. These analogies. The golden ratio and the Fibonacci sequence are two different things, but there is a correlation between these two that I will explain all into this video. Market loves these analogies and prices. They are kept magnetized around these numbers. Still, we don't know why, and I don't want to go deeper. Keep only the information that we're gonna need about trading. The patterns are endless and they keep appear everywhere. And remember what I've said so many times. Sometimes they are not even there. So first things first. Golden ratio is an analogy between two quantities, and here is how it's depicted. I have used squares here to show you with a very simple way. Now we draw our first square. We call it A. The first square is, let's say, 1 centimeter length, the side of this square. Now what we did, we used this 1 centimeter, creating another square from this side. Of course, the first two squares are completely equal. They are both 1 centimeter. But see what's happened next. Now, by using these two squares and combining the sides and the length, we're creating a centimeter that now the length is 2 centimeters, and it consists of the previous two squares. We keep moving on. So now we have another square, which is our third square, and the side is 3 centimeters, 2 from this and 1 from the next one. Moving on, we go to the E, and we have created another square, and this time the side is 5 centimeters. Now keep adding. We will come into the many squares consisting of the previous two one. Let's say the side of the square, and how the golden spiral emerges by using this. Now, why this is useful in trading? Of course, you will need to understand that now we are going to use the Fibonacci sequence, and that's exactly we are going to do. We will keep adding squares and the same analogies. Now in Fibonacci sequence, we're starting from 0, so our first digit is 0, then we add 1, and this is how we move forward by creating this sequence. 1 plus 1 equals 2. So this is our first Fibonacci number. Our second Fibonacci is 3 number. We are adding the previous value, 5, 8, 13, 21, 24, and so on. Now, here is the correlation between the Fibonacci ratio and the golden ratio. And here it comes, because someone will make a very a simple question. Why to start add by using 0, 1, and not start by adding 0 and 2? 0 plus 2, 4, 6, 10, and so on. Well, it is a sequence of numbers. The previous numbers generate the next one, but there is no golden ratio inside them. And here it comes with the Fibonacci starting from 0 and 1. Now, what we did here, we keep divided these numbers with the previous one. These are all Fibonacci numbers. So 3 divided by 2 is 1.5. 5 divided by 3 is 1.66. We are continuing, keep doing these divisions, and the pattern which emerges, the number which emerges, it's the golden ratio number. Number which is known as the letter phi, the Greek letter phi. And this is the golden ratio number. It's an endless number, of course, because it comes from pi. So that's how this analogy is created. Now let's apply what we've learned about these analogies, about the golden ratio and the Fibonacci. You don't have to memorize anything of these. There are also some sites that they can show you automatically the retracement and the extensions between the prices that you want to trade. This is just an introduction, because it's very important to understand what is behind. I did the same when we are using indicators, so I'm analyzing always what is behind it. And the useful part is how you're going to use it in your trading. So we will open now some live markets, and I will show you exactly how we can apply this indicator. We said it's not an indicator, but that's how we will keep mentioning it. And let's go to some live markets and see some examples. I will open the GBP USD to show you the example and how you're going to use these analogies and how they work. We have already discussed that the market repeats herself. Unfortunately, not with the same way. I know that this doesn't sound very logical, but there are irrational markets. That's why 95% are losers. You need to have a very different mind setup. And this is just a tutorial. I'm trying to show you the basics. Most of the times I'm using the MT4. So I will use the MT4 again. I will use the Fibonacci. I won't show you about the fan, the arcs, and some Fibonacci channels. In my perspective, it's useless if you don't understand the main idea and how you will use the Fibonacci. So keep in mind that we are just looking for the basics. Now, to apply our Fibonacci, we need 3 points. We are assuming, and this is the easy part, this is the easy way that I'm showing you every time. I just found the time frame that works, and I just found a wave that works. When you are entering in live markets, you won't have this kind of details. If you change time frames, everything will disappear. I'm just making this example because you will see many people out there that they claim that they have like an ABCD pattern when this crosses the other one. No, you are significantly and far away from trading. Let's take these 3 points. Now I am assuming at this market we have a downtrend from the point A to the point B, that we will have a retracement. The market will start, won't go down right away or up, with the same way. It will start making some short breaths. So I believe that this is a retracement. I told you that the market is kept magnetizing around these numbers and these analogies. Now, if I'll draw my Fibonacci, this will become automatically. You can also find some sites, they are totally free. that you can enter your price at A level, your price at B level, your retracement, and then they will automatically say you what is the retracement, what percentage, and how you can use the extensions. Now, there are two numbers that you will listen very often. If we check the retracement, this is automatically, the numbers are automatically in MT4. We will keep the numbers 38.2. Now, how this number comes up, since we have the 1.61, I mean, how this is related? Well, this is exactly how it is related and how you need to open your mind when you are trading and not think like rabbits. If you deduct the 61 from the 61.8, it's 38.2. So let's say that in percentages, in analogies, the retracement, if the entire move was the 100%, then the 61.8%, the golden ratio fee and so on, is here at this point. Visually, it looks like it's a bit more than 50%. You can see that also 50%, it's a Fibonacci ratio. It's not. Many people will doubt. I personally doubt. I do not trade the 50%. I mean, it's not so obvious if you check back. 1 divided by 1, which is the 50%, is equals to 1. It is not close to the golden ratio. Most likely you will hear the 38.2 or the 61.8, which is exactly the same, even though you're going to see them in different scales. This might be a bit confusing, and this is the reason that many people, when they are drawing the Fibonacci, they are drawing with a completely opposite way. And you might hear that, for example, the Euro USD or the GBP Yen or the USD CAD is at the 38.2 retracement, and if you measure it, it will be at 61.8. Of course, deduct the numbers from the 100 and get the opposite figures. We are playing with analogies here, and that's why I tell you that the number that the market loves and magnetized by these numbers and by these analogies. Our fellow trader again feels very lucky, and he's well known, educated. He probably googled some information about that. Again, the first question that will come in your mind is why to use the point A. Why not using the point B? Then the entire doesn't make sense. Of course, there is the 50%. And why not using from higher? I mean, why not using these extensions? Why especially these points A, points A and point B? And why do you believe that the point C will be the retracement? This is the hindsight. This is the negative effects of the Fibonacci and the golden ratio when you are trading. You need to understand that. We've said that many times when we are analyzing a tool. It's not easy to use it. I said that before, that the market repeats herself, but not with the same exactly way. And if you of course change time frames, things will become differently. That's how you need to combine too many information. Do not make it complicated. No, you don't have to do that. This is a trade that I already took. This is our live account that we are trading for this channel. All the profits will go to you, to my subscribers. I have already told you that. And also I've told you to have realistic expectations. And this is the negative part of this tool. It can become hindsight. Of course, there are many friends that are trading a bit more advanced pattern. I will explain all of them in this channel. I will have some interviews with them. They are more on some bats, crabs. You might see some animals, and some maybe consider them as fairy tale or stories, but these people are managed to have very profitable accounts. Unfortunately, again, there is no a simple explanation why these numbers work. And I told you the hindsight already. Imagine that you are trading this setup, the ABC. Now you want to put your targets. Your targets will be the extension. You can see that they will automatically pop up as you can see them here. So you don't have to worry about that. You need to be agile with your trading. You don't have to be so greedy. Most of the traders use the 161. There is also the 123. You can add your Fibonacci levels, and you will understand that even though it's very hard to start trading, because considering the fact that the market did here move from point A, B, it retraces to C, but it might just retrace it at 61, or it might either retrace it earlier, or at these levels close to your previous point. So you understand, and this applies every time you see any tutorial. It doesn't matter. That's why we have said that many times in all of my videos, that trading is not so easy. Some people searching for some channels, and they are claiming things that they cannot even prove either with a simple real account. They are speaking about a simple divergent or a simple indicator and the ABCD pattern, and that's it. Unfortunately, it's not. It's very hard. And when we are talking about this ratio, the golden ratio, it can be very tricky. It can be applicable into many prices. And now if I switch to my daily chart, you can understand now that the things are completely different. And if I switch to weekly, you understand now that things became significantly more complicated. Now, where is my A, B, and C? Where is my initial move? Where is my retracement? This is trading. This is how things it is. You need a lot of experience to understand that you cannot beat the market so easy. Again, thank you very much for watching this video. I hope I'll see you in the future, and trade safe.